Aloha. My name is Eli Gillespie, and I am the owner of Gillespie Insurance Services in Redlands, California. And today I want to talk with you about the property coverages found on a business owner's policy, also known as, and henceforth described as, a BOP. A little background. In my previous video, which you should check out, I described the BOP at a pretty high level. I told you that it was a bundle of insurance coverages packaged together on one convenient policy. The two main coverages in the bundle are general liability and property, although there are other coverages, many other coverages available. It is with this context in today's video, I'd like to go a little deeper on the property coverages. But before I dive deep, I want to bring up 2 points. One, this will still be a pretty shallow dive. We're snorkeling now, maybe holding our breath and going down 6 feet to look at the pretty Humu Humu Nuku Nuku Apua'a. That's a real fish. A true deep dive would be a semester at college. Okay, so I want to make that point. We're just getting a little below the surface. The second point is that I want to define property. What are we talking about when we say we are insuring property? I'm talking about physical, tangible property that is owned, leased, borrowed, and otherwise used in your business. There are two broad categories of property. There's building and business personal property, also known as and henceforth described as BPP. But you'll see there's an overlap. In this overlap, you'll have tenants, improvements, and betterments, also known as and henceforth described as TIB, that can be considered either a building or BPP, depending on the situation. So, what is a building? It's pretty straightforward. A building is a structure with a roof and usually, but not necessarily, four walls that you operate your business out of. It's your store, your warehouse, your restaurant, your office, or if you're building, or if your business is landlording, it's the building you own and lease to others. What is BPP? This is the tangible items used in and for your business or building that aren't part of the building itself. BPP is everything from furniture and fixtures, machinery and equipment, stock and materials, personal property of others in your care, custody, and or control, such as the pants you're going to wash in your dry cleaning business. It can be leased equipment that you're contractually obligated to insure. For example, one of those big expensive copy machines, I don't know if anyone does that anymore, but those big expensive copy machines that you decided to lease instead of buy. Those are all considered BPP. A wise man once described BPP as everything that would fall to the ceiling if you were to pick up your building, hold it upside down, and shake it. Now, lastly, TIB. What is it? These are the items you've permanently installed into the space you're leasing. Some examples of TIB would be interior office walls, restaurant booths and bars, permanently installed counters and cabinets, wall coverings like wainscot. Wainscot, that's a thing, right? It's a chair rail. Yeah. Okay. These are items that would become a fixed part of the building once the installation is complete. So TIB sits in the middle of this Venn diagram because it can be insured as either building or BPP. Just depends. It's not hard to do to assign it to one or the other. You just have to segment it out. Or, in other words, you have to define a value for it and discuss it with your insurance agent. Our recommendation is to try to insure it as building. You want it to be building because that's where the better rates are. Okay, now that we've defined property, let's dive down with the tropical fish and answer some frequently asked questions. One, does a BOP cover all my BPP, like everything? Well, most of it. There are some exclusions and limitations, however. Regarding limitations, most BOPs limit the amount of certain categories of items it will pay a claim on. For example, physical cash, valuable papers, electronic data, which is technically not a physical tangible item, so it's excluded, but most BOPs add a limited amount of coverage back into the policy. Things like outdoor property, like outdoor furniture and tenant glass, all limited. And tenant glass, you're thinking, why, as a tenant, do I need to cover glass, which is a part of the building and owned by my landlord? Well, check your lease. You may be responsible to cover those big panes of glass at your storefront. That can be covered as BPP, but it is often limited. There are some categories of BPP that cannot be insured, such as, but not limited to, automobiles held for sale, land, growing crops, live animals, and sadly, contraband. Can't insure contraband. So you're going to have to self-insure those shipments of cocaine coming from Colombia because the BOP won't cover it. Ship it back. Sometimes it's not about what the property is, but where it's at. Its physical location determines whether it's covered or not. Property off premise, property in transit, in a truck, in transit while airborne or waterborne. These are all locations that a BOP may limit or exclude coverage on. Underground property is another commonly excluded class of property, like underground pipes, flues, foundations. Those are examples of underground property that a BOP may exclude. The good news is that usually there is a way to insure these items if you need the coverage, except for the contraband. So for the autos, there's a garage auto dealer package that you would insure those things on. Growing crops and animals, that's a farm package. So you can get the coverage, but a BOP will often exclude or limit a pretty sizable list of items. So check your policy. Two, do I have to insure every item of BPP separately? Like, do I have to list each item on the policy to insure it? No. Fortunately, BPP is covered on a blanket basis. That is one big pot of money for all your BPP. The policy will have a limit and includes all the insurable items. So the way to properly insure yourself is to estimate the total replacement cost of all the items, counting as BPP, and insure it as one lump sum. Typically, each location will have its own BPP limit. So if you're a multi-location business, each location, location one, location two, they'll each have their own limit. It is, however, possible to create a blanket for all locations combined. And the advantage of that is that you don't have to worry about underinsuring a specific location as much. So if location one is underinsured and you have a total loss at location one, you still might be okay to recompensate yourself for all the lost items and buildings because it falls within the entire blanket. Okay. So, number three, is all my property covered for anything that could possibly cause damage? Possibly cause damage? This is an important question, and the answer is no. There are lots of bad things that can happen that aren't covered. For example, neither flood nor earthquake are covered on a standard BOP. Also, government action is not covered. So this is where your municipality tells you that you need to knock down the rest of your building after the first half of it burns in a fire. The demolition, the rebuild, the code upgrades that you would have to do are not covered. Those are things that would have not been lost or destroyed had not the government told you to knock it down. There are other significant exclusions and limitations on a standard BOP. Theft of property by an employee, that is an inside job, not covered. War, nuclear hazard, not covered, although terrorism may be and usually is covered. Fungus and rot, not covered. Wear and tear, rust, corrosion, and a few other variants of decay and dilapidation are also not covered. There's some other lesser known exclusions that may surprise you, such as damage caused by animals, like whether you're pets or not. Explosions of steam boilers and artificially generated currents, not covered. The good news, there is always good news. Usually there's good news. There's some good news. The good news here is that many of these exclusions can be bought back. It may be a separate policy or within the BOP itself. Flood and earthquake are two such notable available policies that can be purchased. This is not all inclusive. There are other exclusions than I mentioned, along with more ways to add coverage back. The main thing is that it is important to know what your property is and what it's covered for in order to avoid insurance surprises. Okay, next question, number 4. What happens if I am underinsured? If I underinsure my property? This could happen accidentally, but sometimes to save money, a business owner may want to decrease its amount of property coverage. Like, say they want to insure their building at 50% of the cost to rebuild because they're pretty sure they're never going to have a complete and total loss. I mean, that's sounds like a good idea. I might be interested in doing that myself if I could. No, you can't do that. And the reason is because of the co-insurance penalty. You need to insure everything at full value because the co-insurance penalty will penalize you if you're underinsured on any loss, not just that total loss, or not just if you go over that limit. So, for example, here's a easy, semi-accurate way to think about it. Let's say I'm 25% underinsured. Every loss I experience will be paid with a 25% deduction, roughly. Let's look at numbers. If my building or BPP should have been insured at 100,000, that's the full replacement cost, 100,000. But I only insured it at 75,000, which is 25% underinsured. Even a $10,000 loss, a partial loss, will be paid at essentially 7,500. It's penalized 25%. So you don't want to be underinsured. The co-insurance penalty is toxic. It's deadly. Insure yourself to full value. It's always worth it. All right, last question. Number 5. How does business income coverage work? And do I need it? Yes, you need it. Here's how it works. Business income pays the income that you would have earned during the period of restoration. That is the time your business was shut down because of the covered loss. Once your lost or damaged property is rebuilt or replaced, the business income coverage stops paying. Okay? So during that period of restoration, you can't operate at full capacity. The business income coverage supplements you during that period of restoration. There are, however, limitations of the coverage. Two such limitations are dollars and time. Okay? So the policy will stop paying either after a dollar threshold or a time threshold has been met. Let's look at a dollar threshold. Let's say a policy has a $100,000 business income coverage limit. That means the policy will pay all that lost business income until $100,000 is paid out, without regard to how long it takes to complete the restoration. So you may have a 6-month period of restoration, but if $100,000 is paid out in 3 months, it's done. Those next 3 months, you're just going to suffer with the business income reduced. Let's look at a time loss. A policy with a time limit of 24 months means that the policy will pay lost business income at any amount up to 24 months without regard to how much it costs. For most businesses, I recommend this. And I recommend 24 months because 12 months is typically not enough anymore. Sometimes you can get 18 months. If you can get 24 months, do 24 months. The coverage is called an actual loss sustained policy, by the way, and it has the time limit. A little known fact about business income coverage is that it can come with a deductible. This deductible is based in time, not money. Okay. So for example, a policy may come with a 72-hour deductible. What that means is that for the first 3 days of lost business income during the period of restoration, it is on you, the business owner, cover any lost business income. Only after 72 hours has passed will the policy start paying. Lastly, there's another part of this coverage often included called extra expense. You'll see it on the policy, business income and extra expense. This is where the business income has suffered a covered loss, but rather than the policy paying for the lost business income, the policy pays the extra expenses required to keep your business running at full capacity during the period of restoration. An example of extra expense in action would be if a business had to temporarily relocate following a loss and the insurance company paid the rental costs. As a postscript, it is important to note that business income and extra expense is a contingent coverage. That means a business must sustain a covered property loss in order for business income coverage to kick in. If there's no covered property loss, there's no business income coverage available to use. I mention this because during the COVID era, there were a lot of businesses looking to file a business income coverage claim because they couldn't run their business. They were denied coverage because there was no preceding covered property loss. It was a sad fact, but it was a fact nevertheless. Okay, those are all 5 frequently asked questions that come up a lot and I thought worth answering for you today. Lastly, you may be wondering, this was great. Thank you, Eli. Appreciate all the help. I know a lot about property insurance now. How do I work with you? How can I get a quote? That is a great question, and it is super easy. The way to do it is just to go to our website and click up here in the upper right. It says Get a Quote. Click on it. Just input your info here, as much or as little as you want. Describe your business right here. Answer the difficult calculus question down here and hit Submit. And when you do that, that'll go to one of our agents who will reach out to you, ask you a few questions about your business, identify your coverage needs, and then present a proposal to you at no cost and no obligation. At that point, you're free to ask questions, decline, or go with it. We're happy to help you. Thank you for watching this video, and I will see you at the next one. May your life be filled with lots of aloha.